Hi, this is Matt Templeton with Keller Williams Realty in Albuquerque. Today, we're taking a question from one of our Facebook friends, and the question was, I hear the interest rates are rising. How will that affect home buyers in purchasing homes? Interest rates are going to start rising. They're the lowest they've been in 30 years, and there's no reason that we shouldn't see them get back up into the sixes, sevens, or even higher in the next few years. The Federal Reserve regulates monetary policy, and the way that they change the rates will raise the interest rate. So the way that they change their monetary policy will directly affect what the interest rates are. But even if they don't change the rates, if they make comments about things that seem like they might be changing the rates, or if they make a comment about the economy in general, it can cause the market to shift on its own. And so right now, the rates that the Fed has issued are nothing essentially, and the rates still are very much fluctuating based on how the market is doing and what the Federal Reserve makes in their quarterly statements. Um, right now, rates are extremely low. I recommend that home buyers do purchase now because the affordability of homes couldn't be cheaper. In fact, we're seeing home affordability back into the early 90s. If we compared like for like cost for homes with interest rates and pricing and everything, and we looked at what would be the cost of buying and paying for that home monthly now versus the 90s, they're about equal. That's amazing. I mean, the cost of gas and bread and milk and everything else is, quadrupled during that time, and yet the cost for housing is extremely affordable. So that's one thing. If interest rates do rise, when they do rise, 1% in increase will affect home purchasing by about 10%. So if you imagined that, we'll use an even number, you wanted to buy a $100,000 house, and you decided that you were going to buy in 6 months when the interest rates have gone up. Now, instead of 100,000, you could only afford a $90,000 house. That makes a big deal when we start getting up into numbers like 300,000, because instead of 300,000, you can only afford a $270,000 house. So not only have interest rates affected your ability to afford it, if prices go up, then what you get for that price also is not as much. And so all of a sudden you're buying a 3-bedroom house instead of a 4-bedroom, or you're buying a house with no backyard instead of a lot of backyard, or a house with no updates instead of a brand new kitchen. So buying now while interest rates are low and prices are reasonable is a great time to lock in extra savings and getting the home you want at an affordable price. So we absolutely recommend purchasing now. Interest rates going up absolutely affects affordability. We're going to see people buying less of a house, buying lower priced houses because they can't afford as much. It really affects qualification. Again, that number is about, for every 1% it goes up, it's 10% on affordability. So imagine that interest rates were to go up 2%. All of a sudden, we're doubling those numbers. Now at 300,000, you can only afford a $240,000 house, and that's a huge difference in what you can afford. Anyway, that's all for today. Thanks for the questions. Feel free to post more questions on our Facebook page. The link is down below. And also feel free to send us a message if you've got any questions on buying, or give us a call at 505-750-3305. Look forward to working with you soon.